So, hello, and a massive hello to everybody. Hope everybody's having a great day wherever you may be, whatever you may be doing. This 50 pips rocking and rolling here, 2nd of March 2018. No trade calls, no recommendations, a response for their own stuff because we're here for educational purpose only. So, very quick update this morning for the morning blog post. Again, don't have time to start to post all the charts on the blog post. Just going to take too much time. Very busy. So, of course. Trading comes first. So, but still didn't want to cop out, still wanted to get something out to you guys. So there's a lot of interesting things going on. So as an update, what we were saying is a lot of the moves are sticking here. So what we were saying is basically the big focus was on some really interesting setups shaping up, right? And what we said was basically that, especially if you looked at the world indices versus U.S. indices, we felt that basically the weakness in the world indices was going to basically show on the U.S. side because and not the other way around, not the other indices catching up with the apparent in brackets U.S. strength, simply because we're getting very funky action on U.S. markets, a lot of dislocation, just a couple of names with ramps holding up everything up, and again, all the ramps were on very low volume, so we thought it was very suspect. So we were very much looking for more downside. So here you see that we're getting nice continuation on these trades. Right here you've got basically the Nikkei, right, puked down, came back up. We said very nice setup for a move back down into this 200, another test of the 200, right? Our base case even on US equities is that 200 DMA is going to be tested again. So here, as you see, right, back down into the 50, big test of the 200. If this breaks, then we're looking at those extension targets. Very interesting action here. If you look at a very similar kind of location on the DAX, even more aggressive, right? You look at the Euro stocks, the same thing, down, heavy, looking for an extension move down. This is very heavy because it's completely blew through the 200 and holding very heavy. So a lot of interesting action across the board. And if you're going to be looking at on the US side, right, the ES, you want to look at the 2700 as a pivotal level, right? As long as we hold below, we expect more tests to the downside. Right now, the 100 DMA is trying to hold it. As we said yesterday on Twitter, if it was going to stop and bounce on the day, this is where we'd expect it to bounce, but we expect rallies to get sold. So unless you get some miracle ramp today, we expect any rallies to meet sellers into the end of the week and a move back down towards that 200. If you look at the NASDAQ, which is holding much stronger, keep an eye on the 50. As we said yesterday, if it was going to bounce, it's going to bounce there around the 6,700, this pivotal level. If they're going to ramp it, they'll try and ramp it off here. But look for any rallies to get sold for a move back down. And if you look at the YM, right, it's heavy. As long as it holds below the 25,000, very heavy, like the ES at this 100, rips into the 25,000s, we expect them to get sold for ultimately a move back down. And as we said the other day, we kept on posting these charts on Twitter and talking about the very high odds, very nice setups on a lot of the tech names, and something like XLF. You see how we closed the other day. We said very nice chance to look for asymmetry to the downside, right? You get short with a very tight stop, looking for this to break down. It's a very nice trade, right? Stop, ultimate targets on a breakdown. Very nice action. Extremely interesting. We pointed out PayPal again, right? As long as that holds, you'd expect this to come right back down. And if you look at something like Apple, beautiful little action on Apple, right? There we go. They tried to ramp it early on in the day. Nice chance to get short for a move back down. So all these setups are in play. We'll have to see if there's some kind of a miracle save and a ramp on Friday. But if not, we'd expect to see a little bit more weakness. Also, keep in mind that we've got Italian elections over the weekend, so there's potential event risk over the weekend. In terms of the commodity side, again, we were looking at crude, and we said, after we had the first round of data, we're waiting for the EIA to see a little bit of an ugly reaction to confirm the move down. We said if EIA comes out and market reacts ugly, that should be good for at least a couple of bucks to the downside. Right here, it's still all about this weekly pivotal level. As long as it holds below, we still expect to move back into the 55 mark. Even if afterwards it'll ramp, but we expect a little bit more of a correction, so no change there. And for all those asking about gold, we said, we're looking to get long gold, but we wanted to see an ugly move to the downside. We wanted to see a retest of the 1300. So as tempting as this is for an ugly move, right? This is the kind of move we're looking for. We'll be watching today. This is the first time in a while we're starting to get interesting at possibly nibbling to build some kind of a long trade on gold. We're really not in a hurry, but ultimately we expect it to break higher, but we're going to patiently wait for some kind of action here. Right now, much more focused and happy to ride positions on equities and see what we get there. So again, hope it was useful. Making it very brief, just wanted to make sure I got something out to you guys. Have an awesome day. Thank you for liking. Thank you for sharing. Again, hit me up on Twitter if I'll post any chart anybody wants to look at. When you see me post some charts on Twitter, I just have the, I just say XLF or whatever, and I post a chart without commentary at something. Usually it's because somebody's send me an email or send me a message on the blog, say, hey, can you post that chart? So I'm just posting it for them on Twitter, okay? So have an awesome one. Thank you so much. Take care, guys. Bye-bye.